Hi, my name is Keone. Welcome to Keone Crypto Log. So last time we talked about the logic behind the premium and discount price in the market. So today we're going to talk about how to identify the reversal. A lot of time when we look at the market, we see like the higher high, higher low, and just the trends just keep going. But all of a sudden, this high volume just fluctuate into the market and the market reverse. And so what if I tell you, you can identify the reversal before the reversal happen? So first thing first, we're going to talk about why reversal happened, logic behind it, and the likely place the reversal will happen. And so after we talk about the logic behind the reversal, we're going to talk about the volume, because the reversal and the volume have a really high correlation. So pretty much every time there's a reversal happen, they will come with a high volume. So it's important to understand the volume when we talk about the reversal. So at the end of the video, I'm going to talk about one reversal structure, so you can identify the reversal before the reversal happen. So yeah, let's get started. So have you ever wondering why reversal happen? Because when the market is in the uptrend, because everyone have the same understanding, yeah, market is going to go higher. So with that being said, in order for a market to do the reversal, and the understanding of the market need to be changed. But there's only one problem with it. When the market keep going up, everyone think the market is going up. And so when the market come down a little bit, and people will just keep buying. So trend continuation is really hard to break. So because it's so hard to break, and usually the reversal is happening in really short period of time. So let me give you an example on the Bitcoin, just like how people's understanding of the market changed really fast. So back into September, the market is keep going up and up and up. And so all the people trading Bitcoin will think, oh, the market is keep going up. So the market is in the uptrend. But after a while, the market is just get into the consolidation. But within the consolidation, the people still think, oh, yeah, the market is just getting a rest and it's going to go higher. Even though it's like we see that equal high on the top, and people still refuse to see it because previous experience tell them the market is always going to go higher. So at this moment, so even within the consolidation, just most people still think the market is going to go up. And for that to be changed, like they need a sudden move. So once that support level break, and that's when people's bias change, because they believe the market is going to keep going higher. But when the market break that support, there's an open opportunity for the bear market. And so when more and more people have that thought and to say, hey, the market is not going to go higher, and so people will sell what they have and to avoid further loss. So let's just kind of take a step back and talk about volume. So what exactly is the volume? So volume is basically mean people in the market. So if there's more people in the market trading, and that will be a high volume. But if there's no people trading in the market, and then that will be low volume. So let's imagine there's one guy and they have a lot of pens on hand and they want to sell it. If they put all the pens on the market, and people will say, oh, there's a lot of pens, and so I want cheaper price. And the price will just keep dropping. So he will hold on to the pens until there's a high demand in the market. So in trading, the big institution is the one have a lot of pens they want to sell. If they put all they have on the market right now, the price will drop and they're not going to get a good deal with it. And so what institution will do is that they will use a little money to trigger the big volume. There's two ways they can do that. One is key level. Then two is the news events. So news events is pretty understandable. So when the government lower the interest rate, then people will rush into the market. So the reason why when the market break the key level, it will cause a lot of volume is because usually there's a lot of pending order on the key level. When the market just like get over that, then they will have a lot of order trigger, and so that will cause a lot of volume. So the institution will use these two scenarios to trigger the market with a high volume, so that way they can execute their trade, or they can buy more if they think the market is going to go higher. So key level and news events. So that's the reason why stop hunt is happening, because the institution will just push the market and to trigger all that pending order above the key level, then just like then grab all those order. Then you might wonder if there's a way to catch that reversal, to catch when the institution is doing that. And you are in luck, because I'm going to talk about a structure, and it's going to show you when the reversal is happening. So this reversal structure, in Chinese we call it V-转. Direct translation is a V-turn. So the structure of the V-turn is pretty simple. Just like the market will just like in downtrend consolidation, and it will all of a sudden it will have a huge dip. Then in the short period of time, it will rally back and just like continue to go higher. And so to confirm this reversal, we need to watch out for three things. So the condition for this structure, we need a sudden move. The market was deep down and just like reverse back really fast. So to confirm the V-turn is actually happened, so it's not like a retrace then go lower. This sudden move back need to reclaim the previous high. So the third confirmation we need to watch out is when the price rally back to the previous high, the speed and the volumes need to be more than the dip. So the basic logic behind the V-turn is just the wick. There's a lot more interesting thing about the wick, and we can talk about in the future, but just keep that in mind. And so when you set the wick in the higher time frame, maybe there's a lower time frame, there's a V-turn happening. The way to participate in the V-turn is not when the dip is happen, because when the dip is happen, you don't really know that's the continuation to go lower. So we need to watch out for that previous high. When the market just like break the previous high and then retrace back, and that will be a pretty good time for us to participate in the trend. So let's do a quick recap. We don't really want to chase the market, so wait for the confirmation. So when the market regains the previous high, then you can think about the participating in the market. Now you have to watch out the high volume area, so those key level when there's like a news event going to happen, and just watch out for the high volume, and maybe you can catch the V-turn in the future. So reversal basically just understanding of the market change, because just like usually we see there's a higher high, higher low, and all of a sudden the market break down and create the lower low and lower high, and that's when people views of the market change. So and lastly, don't take my word for it, and just go and just like kind of see if you can find more example, and just comment down below and let me know what you find.